China's pumping, warriors. What does it mean? What's it mean to our board today? How you doing, Sinatra? Monir? Alexander? General Moro? Ninja Man? Glenn? Steve? Ryan? Everyone's here. Look at this. We have a guy, cloud and wave trader to everyone from the Philippines. Hey, you get off of my cloud. Don't hang around with you. Hey, Mike, AJ, Ingmar. Okay, so let's go to work. How's everyone doing today? Good? No, I don't want to leave the webinar. All right. So, yen, I want to start off with. Technically, it looks like a falling wedge up here. You have a confirmed high here. So I think there might be decent risk reward to try the long side here. Stops under, 44. Give it a little tolerance under here, but, maybe for a move to 46 or better. And something else cleared up for me that I'll share with you guys is when you look at the 10-year now, what do you see? Do you see what I see? 1, 2, I think there's going to be like this final 3 up there. And actually TLT has, didn't think I'd be saying it, but maybe we're going just to this level here. I had this line drawn. But yesterday's low on a downgrade diverged. Okay. And then you have some intraday divergence. So I'm thinking maybe one more shot down in bonds, one more shot up in 10-year yields for counter trend initially and see what it turns into. So the last thing would be looking at WTI. It's at, very important resistance here. And if you can see this line at 63, which turned it back here, didn't turn it back for much. If we could close back over 63, it targets about $70. So I think the S&Ps are topping. So that's, you have like a little 3 drive here. See this RSI reading. And you have it in a lot of some of the, like, well, you don't have it in SMH, but that looks heavy. There were some 3 drives. Anyway, I think that we may start this correction in S&Ps. I think at least this into the gap. Okay, so I had more to say than I thought I did 5 minutes ago. So, someone
That's
with
funny, Dale.
Yeah, I mean,
it's amazing what you come up with on the fly.
I don't know. I like to hear other people's voices. So let me start with Ryan. So Ryan, with what I'm looking at here in the yen, is 44 a big level for you?
Yep, absolutely. Yep.
Okay.
You can see we had, if you go back to the
Oh yeah, look at this.
Yeah, and
Yeah.
it goes back further.
Okay.
What fib was it now? I forgot. We had a fib at 144.26, which was the 50 of the move down. Sorry, of the move up from the lows at 139s. So that was at 144.26, and we just got close to that 144, which is it's a big moment because you've got 2 trends in play. You've got the yearly trend, which has been a downtrend from January. Then you've got the bounce from the 139s, which is your uptrend, but we're turning that around. So you could say on a wider basis, we might still be heading much lower and through those 139 lows. But if it holds this 50 area, 144, it needs to get back above 145. To put a dent and keep this uptrend going. So,
okay.
there's two trends to keep a close eye on here.
I'm kind of thinking this is the beginning of that move to under 140. I'm treating it as just, initially anyway, just, some type of retrace of this. So this has been 400 pips,
Yeah.
or three.
It's
Looking
days.
for maybe 6.5 or so. I'll be booking it if it gets up there.
Yeah.
So, okay. View on the dollar. Still done nothing right. It's not giving it up a lot. It feels like there's some buying coming in here the last couple of days, but I don't
It's
feel
not
like,
falling out of bed again at the moment. It had its moment yesterday. Like you say, when you get moves that strong moves, they need to continue. They need to build on it. And it's not quite building on it at the moment. But I think just going back to your dollar yen, a lot of what's going on in there is yen related and the stuff that's happening in Japan at the moment. A lot of focus coming in on those yields and what it means for the Bank of Japan.
I
and
heard
all
the
that.
JGBs had their worst night, well, for them day, in years last night or yesterday.
Yeah, there's been some not too hot auctions, shall we say, and yields have been blowing up a little bit, particularly at the long end, and it's getting a bit of market attention to it now as to whether the Bank of Japan are going to be forced to step in to calm things down. We were talking about it on the Flow show. It's really putting the BOJ in a bit of a pickle because they're trying to get rates up, which is obviously naturally means yields go higher. But now they're facing yields potentially blowing up, so they've got to try and maybe look to stymie that. So they could get themselves in a big old mess.
Yeah. It's almost the opposite of what happened when the Fed lowered rates and yields went up here and no one could understand it. Anyway, levels and anything, Aussie, it's like a meat grinder. It doesn't want to sell off. Hasn't broken out. It's a long time to be in a 100 pip range. Which way you think we're coming out?
Oh, that's the question, mate. If I had to pick a side gun to head, I would say the way that we're not dipping that much, that far, suggests that we could break to the upside. But if we're below 63, 55, 60, that picture might change. So we got a range 63.5 to 65, 65.10. That's what you need to watch.
Yeah, that's a strong market, traders. And Blake talks about this all the time, that can barely retrace. So, I mean, it's working off. It's overbought by movement sideways. All we had was a 23.6 pullback.
Yeah.
So that's indicative of strength.
But then look at Aussie Kiwi, and Aussie's moved a bit more against that one. It's potentially heading back to the 158 magnet. This 108.50 is pretty important. If it closes below there today, then we might be heading a bit lower.
Okay. Bring Kay in. Good morning, Kman.
Morning, Dale.
How are you? Any view on Looney? It's just like, rallied to target. That was the target I had. Do you see it rolling over or maybe a continuation to the upside? Or just leave it alone, it's neutral?
Well, that's what I'm doing. We've got CPI out, so we probably have a bit of a move if we get far enough away from expectations. It's the April number, so that's the number for when that should include expectations for Liberation Day, although USMCA, Canada, and Mexico are a little bit different there. So I haven't got a clue about what those numbers are going to say, and That's why I was saying I'm just going to wait whether we break above or hold 140 and a quarter, or back below 139.80 and 138.80. Sorry, and we
Yeah,
are bang in the middle. So
right.
I don't have any, really not having any preference or urge to do anything in the Canadian dollar right now.
Okay, any levels or anything you're doing in the PMs in gold or silver?
Yeah, there's this 320550 range that is starting to build now on gold,
Gold, yeah,
and anything outside I think would be good for 30-40 bucks, and then we need to make a decision. So
yeah.
I think one of those breaking, silver bang in the middle between 32 and 33 again. Oh, not a lot to do there. Just keeping my rolling position, long-term position, and that's it. The funny thing,
Great call, great call by Stelios to go to platinum, and you also have to acknowledge Tracy Schuchart on that call. But Stel was first. He came in, talking about this. We're breaking out here,
yeah.
it looks like to me. Pierce Palladium doesn't look bad either.
Mm.
You'd look better than silver and gold, or at least from maybe profit risk ratio. They're becoming the leaders.
Kind of, it's kind of funny
So
since December. You're seeing those various waves all the time developing, which last about, what is it, a month and a half, all the
yeah,
time, and seems like the same wave is coming back all the time.
yeah.
Creep higher, have a quick drop, and then creep higher again, quick drop, and now we're creeping higher again. And seems we're doing exactly the same all the time in Palladium.
Yeah,
No, but
Palladium.
we were just talking about it, and people in the chat room talking and noticing it, is that for quite a while now, the market outside of the US is trying to sell dollars, but once the US arrives, the dollar is doing better. And it's been a pattern for quite a bit now, and we are seeing roughly the same again. We printed the highs in the euro, the cable, low in the dollar yen in our European morning, and then as soon as you guys arrive, the dollar has a tendency of turning a bit.
Gold silver ratio, I mean, it had these two drives. I know someone looking for one more push to 110. That would be, but it doesn't have to happen. Like I say to people, when I wait for a three and the two goes without me, that sometimes two is enough, which means it's only one divergence instead of a couple. So we'll see. I think this is important.
Yeah, I
So
think for this to happen, that final leg higher, we're going to need to have very bad news in the market, right? Because in case of really bad news
right,
or risk, gold will
gold,
fly,
yeah,
and
gold
silver won't do anything or even go down. Now,
3,700. You'd probably need in the gold. That's the next
sorry?
target people are talking,
Yeah.
right?
Yeah, yeah,
Yeah.
but you will need bad news. Bad news is probably going to take it there, in your gold silver ratio, and for the time being, we are just it's like the rest of the market, really, right? I mean, you're doing a move, and then you're going up and down, and wait for what is to come. Wait for a result on trade. Wait for a result on budget in the US. Wait for, yeah, I don't know. I mean, this bond in Japan, is Bank of Japan going to show up and buy a few bonds, unscheduled? Could be, but yeah, you seem to be just waiting for stuff to happen now. For the medium term, I mean, okay. For
Yeah.
short term, it's there's stuff to do, but for the medium term, to me, it looks like a wait.
Okay. So when you talk like that, do you tighten up the time frame that you're trading off of at the same time when you're looking for
Well,
smaller
yeah,
moves?
yeah, I caught myself of looking down to the 1 hour, but I won't go below.
Okay, because you
And,
know
and then
that you
look
get a
at where
knock
the
on
hmm?
you get a knock on the door from Ryan if he finds out you're using the 15-minute.
Yeah, well,
That's his,
no.
man.
Ryan looks at 15 minutes. Ryan does look at 15 minutes, but
That's Ryan's time frame. He has a copyright on
yeah.
I do cheap licensing, Dale.
it. All right. So thank you guys for having some things to say when there's uh, not a ton going on. Blake, how are you today? And what's top of mind for you going into today's session?
Well, hey, good morning, guys.
Good morning.
Just in my opinion, there's a lot of consolidation going on. I want to share a
Yeah.
couple of things with you guys. As far as the Canadian goes, we're very much in a nice little triangle. And this setup is right up against the 140 level, so I think it's pretty big. I don't know if today's going to be the catalyst that drives us higher in the dollar CAD, but it's worth noting. It's something, if you're looking in the trades room, or not in the trades room, the general chat room, one of the things that I just was posting this morning regarding the Canadian, which is right here, but you see it in all other pairs too. Like there's the Canadian here. This right here is the Aussie, off the RBA, which I'm going to ask the guys about what their opinion there is here in a second. But you can see the euro is actually developing a wedge too, but this is less of a triangle, or maybe it is a bit of a triangle, but you can see the highs we're struggling at that 112.70 again. I mean, that 112.70 level is such a big level. Remember, that was the big breakdown point. Today's high was 77. So we rejected away from there. And, now we're trying to break lower right now, or at least, making an attempt to, which could allow for, maybe a pullback towards 112 at this stage in the game. So I think the dollar could recover. You were talking about the dollar index soon as we sat down, or as soon as we started. It's still in a bear flag pattern, but we're really shuffling along the bottom of the flag. I mean, this is, if you zoom out, this is really, all we're doing is look something like this, I guess. And I'm setting off alarms by adjusting lines here, but as you can see, we're just kind of probing what I would consider is pretty critical support for the dollar index, which, in translation, if you were on the, listening to the week ahead video, or even last week we were talking about it, we're like, okay, the dollar index at the 100.20 is equivalent of the euro dollar at the 112.70, and that's all that's happening, is we're just knocking our head up against that resistance. But if we fail up here enough, that might get some dollar bears going, we're not going to get any follow through, and it might end up squeezing the dollar a little bit. And we're seeing that, as the Kiwi's hitting new lows, sterling's hitting new lows right now, Aussie's hitting new lows. So the dollar is actually firming a bit at the moment, and I think that's all it is. Just a exhaustion, not getting that dollar follow through to the downside is allowing some buyers to step in, just kind of cover it up and reassess. But I wanted to get the opinions of the guys, that were, they read about this, because I went to bed post RBA, or pre RBA, which is a shame, because I was short Aussie Kiwi and I took a few pips off of there. I was short some Aussie yen and I took a little bit of a loss there, but I didn't want to stay up so late. It was, Dale was like 9:30 our time, and I was just so tired yesterday. Yeah, I was wiped out. But so Ryan, when the RBA cut, we got a dovish cut. Is that correct?
Yeah, Bullock taking a bit of a turn. The statement, or she said that they discussed a 50 as well. Someone put up an argument for a 50 cut, which was a bit of a surprise. There was still they're not saying they're committing to a speedy path of excuse me, a speedy path of rate cuts. But it was definitely more dovish than we've heard of late.
All right. So, I mean, and you see the Aussie Kiwi just rolled over from some pretty key resistance. It's pulling back now finally.
It's
But
yields too, Blake. I think yields, it could be part of it. 10 years up a couple. It's going to could challenge at 450. I mean, we're basically 450 here. So maybe we're going to even try 460 or something. That I think that's supporting the dollar, and that might be behind the pop that we could get in the end.
yeah,
Or more.
which was really interesting yesterday is
Yeah, they
yields.
didn't kill it.
No, they didn't kill the bond market, which,
Yeah.
the bond market, I mean, whether you're looking at the, 10-year, the 30-year, we really firmed up,
Actually, a
off of the lows.
divergence. Jim says, okay, see, you're at the same low or took it out on the longer duration, and on the shorter, it put in a higher low. You have those little green markings on the other one.
Oh
That's your
yeah, on
higher
the 10-year,
lows.
yeah. Yes, it's
So
it's a
that,
higher low. Yeah.
yeah, Jim says those divergences can be very important for turning points.
Yeah, because he likes to look at the divergences between the two,
Yeah,
the 30-year and the 10-year, and so he's
yeah.
seeing that, where the 30-year is hitting a fresh or close to low. Actually, I think I hit a fresh low, but and the 10-year didn't. So yeah, maybe that's telling us that the bond market may turn higher, with that which would actually mean that yields would end up turning lower,
Right.
but that's not
Have
the case, at least this morning.
Have you
So.
seen the positioning on bonds? We've been talking about for a year how short the market is. And in the last month, they've exceeded that by quite a wide margin of, I mean, record shorts in the bond market.
Let me see if I can pull up well, here's the ZBs.
Okay.
Let me see. Let's pull up let's go up to 5-year. Well, actually, let me see if I can go, yeah, 5-year, or maybe we go to max.
Yeah, I
Okay.
don't know. I don't know why they aren't, Phil. So the JGBs are rallying? Was it this going on?
Well, I don't know. So
I
I'm
don't know.
I'm just I'm pulling up here's the 10-year, and I mean, yeah, I guess that is right now
Record.
record, shorts and speculators. So that we could definitely get a squeeze. I mean, and this
Yeah.
is the 10 years. It's not as clean in the 30-year, but yeah, I mean that's part of it. I mean, CFTC data is, part of the equation. There's a lot of other metrics that people will be
Well, it's
looking
just
at, but
fuel if they turn it. A lot of
yeah.
fuel.
Yes, yes, especially if they turn like the 10-year higher, which
Yeah.
I don't, how many people do you know that's expecting the bond market to rally?
None.
None, right,
Because
exactly.
I because I've been bearish TLT and I get a lot of stuff on Twitter. It's only basing Dale. It's so a lot of people. Guy Ed has been long bonds for 2 years, and it hasn't been anyone who's just been long bonds. I don't know why they're so proud of being in bonds because they
Because they haven't collapsed
avoided
yet.
because they avoided the decline, but they also avoided the advance. They avoided the decline in equities, and now they've avoided this advance in equities. And maybe they'll have their day, but it certainly hasn't been a high performing asset for 2 years.
No, it hasn't.
Yeah,
Oh, I
and
mean,
just one more thing I'll let you go is that guys like Guyed and I know others are looking for a credit event. Okay, what they don't realize is the bonds are the credit event. They're looking for something outside, some type of bank issue or this or that. The issue is, um, the black swan is what they're long.
well, yeah, I mean and that's the thing with most people, Dale, is they're waiting for this black swan event that doesn't ever come. And if you are consistently in that mode, you're going to miss a lot of opportunities. And I mean, that's just the bottom line. There's so many people that are always waiting, always waiting, always waiting. So, you know, for us
Anyway,
is, we're a trader. We're traders, and I mean, I can clearly see where TLT is going to break down. I mean, we all can, right? I mean, if it breaks, it breaks, and if it bounces here, so be it. It bounces here. Maybe it's on a little risk aversion. Who knows? But yeah, it's a wild notion to always be sitting there waiting for something. I think it makes sense to always have your, not blinders on and have awareness, but to sit there and just every day think that it's going to be the end of the world is beyond me. I don't know. I don't get it. Anyway, George asked a little bit earlier, do we sell the S&P here today? And I'm going to tell you this, George, we're in the ascending wedge. And yesterday, we talked about the market, shuffling off and dismissing the S&P downgrade. I don't know if we said it here, but we were talking about it on the morning edge. And, so Sarab, who's in our chat room, asked, he's like, Blake, how did you know that? I'm like, we've been around enough downgrades over the years where the market sees it as just a non-event. So I figured we'd rally to new highs, divergent relative strength. That gave us an opportunity to put in a fresh pattern in play for the S&P yesterday, right there, while we were at the highs. And so I wouldn't get bearish until you start creating lower lows, but I think that might be the risk today. We'll see. It's hard to see what the driver is going to be on a day when we get Canadian CPI. Unless I'm missing some sort of speaking event today. I don't know. Well, we do have Barkin and Bostic are speaking, Musalam speaking, Kugler speaking. Daly, Hammock. I mean, there's a bunch of Fed speakers today, but I don't know if they're going to say anything that really moves the needle. I don't know. Anyway, as I get set up,
that's a good trade, man. And it lines up with Maldonado's rebel yell from the interview Friday. So he had a cycle coming in here. That's good company.
Yeah, I mean, I wouldn't be convinced until you break this little support zone. You can see it here. I've had it highlighted since yesterday. That's where. Go ahead.
Do you put objectives on your pattern in play where you'd be taking?
Absolutely.
It? Okay.
Yeah, it's 5,500, Dale.
Nice. That'd be a great trade.
Yeah, it's 5,500.
10%.
So, yeah, it'd be a decent move. Yeah, from here for sure. So yeah, and if you guys want to know where all the patterns in play are, and then you can go to what we've done historically over the last 8 years. Let's see, how many patterns in play have we done? We have done 2010 patterns in play, and you can go look at every single one of them over the last 8 years, and you can see all the running, number of gains and losses, and our hit rate's about 53%, which isn't bad, especially when our risk reward is always 1 to I think our average risk reward is 1. Average risk reward is 1 to 3. 1 to 3. So yeah, and that's team wide. It's not just me, it's obviously team wide. So anyway, we got Canadian CPI coming out. Let's get to it. You go over here to calendar. Let's grab our data flash. I'm going to pull that over. Ryan, what are you thinking today as we go into today? Anything you're going to be picking on? Any currency pair you're going to try to muscle today?
Yeah, well, we were looking at this Canadian CPI on the Flow show because, given the environment of tariffs and everything, it seems like it's set a little bit low in the expectations for 1.6 versus 2.3 previously. So yeah, keep an eye on whether it's not as low as the market's expecting.
All right. Well, if it's a higher piece of data, then we should slam through that 139, 30 level somewhere down here. So, Kman, what are you thinking?
About the Canadian CPI? Nothing.
No, about whatever. We got less than 30 seconds. So, anything you think you looking at today?
Yeah, I'm still trading. I mean, scalping really gold from the long side, but only if it goes down. I'm not chasing anything. I'm not. I'm actually not chasing anything at all. But I'm keeping a few dollar shorts, smaller dollar shorts, mainly cable and euro dollar right now.
That's cool. Yeah, I'm playing just the euro. I think the euro eventually breaks
Hot,
113. So,
well,
hot.
slightly hot.
All
Here
right.
it
Year over
comes.
year is a little hotter. The month over month. Wow.
The core
The
numbers
core,
hotter.
the core is
Cores are
hotter.
hotter. Yeah.
Yeah, so that's what's mattering right now. So you're right, Ryan. That was the core data was the one that moved. But is it gonna get us out of this malaise of this triangle? I doubt it. You know, we'll see. It's I kind of want to use this opportunity, this Canadian strength to sell into. I am a firm believer that the Canadian currency is going to suffer a little bit more than other currencies. So I actually like to play like the Euro Canadian has been, one that I've really wanted to be on the long side. I just haven't pulled the trigger yet. So it's just something that I've been considering.
That's got another high in it. Yeah, maybe.
I would think. I mean,
Mhm.
I think that it eventually breaks higher, but that probably has more to do with the euro, getting above 115 and dragging all the euro pairs up versus the Canadian. I don't know. It's one that I want to play to the long side. I just haven't. Um, Dale, I know you have an interview, so I'm going to. Oh, you'd have the goddess of grains here today, so you have Angie.
Yeah.
So I'm gonna pass you over to for your interview, but I do want to mention we do have a trader funding program sale just for the week. It's a spring into summer event. We actually are for the very first time. If you want funding, instant funding, we're having 15% off those packages. So if you immediately want more capital, check out the trader funding program. You can go right to our website, and it's the second panel here where it says don't trade your own money, trade ours, and click there, and you can see the different sales that we have. All right, Dale, I'm going to hand it over to you. Thanks, guys, for being
Looks
here
like a
today.
great deal. You know,
So,
these kinds of prop deals weren't available when I was younger.
oh, no, I mean, I had to go out and find investors.
Yeah,
I mean,
right. That's what I did. Yeah.
And just so you know, when I traded for uh, uh, Gelos and I traded for Spectrum, and for most prop traders, your take is
It's
less than
fifth.
50%,
Right.
and 50% is a big take. On you have to be usually have proven your worth for a long
Yeah.
time and negotiate that kind of deal. We pay out 75 to 90%.
Yeah.
So,
Yeah. I mean, it's really evolved.
mhm.
And to the, trader's advantage, it's great to see that type of evolution.
Yeah.
So, all right, bro. Well, thank you, Blake and Ryan and Kman. Good luck the rest of the day, guys.
Dale.
Thanks,
Dream.
mate. Have a good
Thank you,
Good luck to you,
trade.
Dream
Dale.
Team. All right, Angie. Let's get caught up. Welcome back.
Yeah. Yeah.
How
Thank you. I'm excited.
I remember last time we were talking. I thought corn might have a move back down to I think it was 430 or so. Let me get
And I had hoped you were wrong, but you were very, very right. Very,
and
very
it
quickly.
bounced back like a champion,
Yeah.
really, didn't it? So, and then everyone we had all of this tariff. So here's the corn. So here we are again. Doesn't look bad to me. This
No.
looks I think this might be a very good entry. I haven't looked
Yeah.
at them for a day or two.
Yeah, I would
So
agree.
so and I didn't see that much damage, price damage after Liberation Day. I mean, wheat was
No.
still grinding. Beans didn't get killed.
Mm-mm. Yeah.
Um, if they were going to buy all their beans from Brazil. So tell me what you went through with the tariffs. I know people were worried, and what
Yeah.
you're seeing with price structure here.
Yeah, I mean, definitely, we've had a bit of a bumpy sort of ride, and we've had several sort of inputs into, the fundamental picture. Tariffs, of course, are, just one of the things, or the worries over what will happen when it comes to trade and all of that good stuff. I've been pretty adamant here all along that, tariff or no tariff, it doesn't really change the balance sheet overall. And and when it comes to the global supply and demand outlook in soybeans, we do have plentiful supply, from an overall standpoint versus demand. And we can talk about market share and things like this, if Brazil can replace the US into China and all of that and here in a minute. But from an overall standpoint, soybeans are relatively plentiful, or at least you can access beans
It's
with
interesting.
ease.
Your fundamentals kind of line up with what I'm seeing technically on the
Yes,
weekly.
it's kind of
Unless,
beautiful.
yeah, unless we close over 11, I would leave it alone because you
Yes.
see this RSI pattern here.
Hmm.
This momentum was 19. There's
Yeah.
no divergence. I think there's one more flush left in beans.
There's
What do you
there's
think?
a lot of uncertainty in beans. The problem that we have currently, like I was saying, is that we have plentiful supply. Brazil just harvested a record crop. We've got Argentina in the process of harvesting, and that's when you have a relatively full pipeline. From a logistical standpoint and some of these other things, like it's about as full as it's going to get. But yeah, you're going to see beans trade a little bit sideways. Their weather markets also later, and so they're not going to have as much of excitement around them unless we see something positive come from the administration with biofuels or a trade agreement with China, but I'm not holding my breath. Over here to wheat, I think wheat, in my opinion, has the biggest potential for an explosive move, simply because I think we've lulled the market structure into sleep, and you've seen the speculator go incredibly short. On the chart itself,
Yeah.
it doesn't really look like too awful much to me, just looking at your view, but you're the technical guy. I'm the fundamental
Well, you
gal.
know
So
what I call it, Louise Yamada would call this like a saucer bottom.
okay, yeah.
Okay.
Yep.
And with a breakout over 7.
Yeah.
And look at the divergence that we have here. We've been diverging since this low. This was the last confirmed low, or I could even say it was here, but I'll make it conservative. That's March of 24. So we've been compressing and diverging. Look at this.
Yeah.
Higher low. Hold on. I have to buy some here. And then we're getting
I
a
feel
nice
like
week here. That is a
sometimes
nice look. That's a great looking chart for a bottom pick, Genji.
and that's, to me, I feel like from a fundamental standpoint as well, like historically speaking, anytime you've seen wheat get this cheap from a global standpoint, or seen US wheat become the cheapest supply in the world, we tend to see a pretty explosive sort of rally. It's a couple things that just don't make sense in the physical market, to
Yeah.
me. And so you see a little bit of a continuation of pressure, or we have seen it. A lot of people have spoken very poorly of wheat, but when you look at what's going on in the world, the pockets of discomfort from a production standpoint, look at China. Over 1/3 of their wheat is currently experiencing extreme drought and high temperatures. Their highs over the weekend were almost 110 degrees Fahrenheit. Wheat can't handle that as it's heading out. I mean, you're going to have some pretty extreme issues. That's not to mention, geopolitically speaking, if we were to see something happen with, more in the way of sanctions on Russia, if Senator Graham gets his way, he's got a pretty extensive sanctions package that would make it quite a bit more difficult for Russian wheat and Russian, commodities to flow into the world market. There's several things to be paying attention to in wheat that I
Yeah.
think could be really
And the
interesting.
Russians could make it difficult for Ukraine, the breadbasket,
Yes.
to get their grain out.
Yes. Yes. There's all
All right.
kinds of
Wow.
issues in the world that,
I
yeah, I
like
think.
it. This is
Good. I'm glad.
biblical. This is biblical, Angie. God, everyone build a silo. But
Right.
that looks very good. And I was also looking at corn. Corn
Mm-hmm.
started the whole thing. It bottomed down here. We were on the air back here.
Yes. Yeah. Yeah. Yeah.
When we
Remember, I was
uh,
very optimistic about
uh,
price.
no, and everyone was depressed. I don't
Yes.
know but it's been advancing for almost a year.
Hmm.
and this looks corrective.
Yes, I thought
So
it was healthy.
corn has the strongest chart of the three.
Yeah, I would put that too. I would agree with that. And corn has the strongest at a glance supply and demand picture. Really when it comes down to it, the world continues to expand its demand for corn. Biofuels, ethanol, especially as you look at India demand, Japan's looking to go to E10, Brazil continues to raise their ethanol blend rate. The US is kind of supplying the world with ethanol. We forgot about that as a growing demand sector. We're also,
Right.
we have more protein units and things. We're feeding more animals. Like people want to hold more corn, because it makes sense, or it's food security and things like that. China is also dealing with some pretty extreme growing conditions. It is early yet, but they have really laid low on imports. They could come into this market at any point in time and buy 6-7 million metric ton of corn. It would be in line with forecasts, but because of how tight we are in the old crop, pipeline currently, that would be huge. That would be explosive. And we have a farmer who's already sold out, a speculator who's incredibly short. There's really no one in the middle. If the speculator were to decide to buy and the end user were to decide to buy, there isn't a natural seller in this market aside from new crop. And that'll only be once the farmer feels comfortable. Like you'll see some selling as we work our way through June. But with the issues that we're starting to see pop up with early production, especially in the Eastern Corn Belt, you're not going to have aggressive farmer selling into this market either. And so your natural seller would disappear. Your natural buyer, if they come back in and your speculator decides to get engaged, this market could also be pretty explosive. And, one of those things where all of a sudden you're like, how did that happen? Because we're
Yeah.
substantially higher.
We could have weather markets too in the summer, right?
Yes.
There's no El Nina, La Nina anymore. I
Yeah,
guess
we're
some other
neutral.
current
Hmm.
overcame it. So
Yeah.
there's nothing out there.
Yeah, right now there's nothing that would really drive from a La Nina El Nino standpoint. We're
Yeah,
pretty
nothing.
neutral there. There are, like I said, some weather issues that are popping up. There's been some forecasts for extreme heat and dryness in the Western Corn Belt. That looks a
There you
little bit
go.
more difficult to achieve with how wet we've been in the southeastern portion of the U.S. But that extra more moisture in that southeast portion, if you look at the Eastern Corn Belt, east of the Mississippi, Southern Illinois, Southern Indiana, Ohio, into Kentucky, parts of Tennessee, and points south, they're a large corn producing area. They're a huge corn demand sector when it comes to feeding animals, ethanol plants, all of these other things. And they're struggling with too wet conditions, which is really difficult for the market to kind of understand because quote unquote rain makes grain.
Right.
But there are some big issues popping up, and I could see it
They
to
can
where
get diseased from
yeah,
all the
yeah, you'll have
right.
issue. We're going to have to replant. I have growers in Southern Indiana that know they're going to have to replant a crop. The question comes into play, do you want to with corn? As we work our way towards the first part of June, you get into a late planting situation. A lot of times guys want to have the crop in the ground, by Mother's Day, Memorial Day at the latest,
Yeah.
especially to the south of us here. So it's not pollinating during extreme heat. There's just a lot on the radar that folks should be paying attention to. And with you saying the chart looks healthy, I would not want to be a short at this moment. I am not a speculator, to be clear. I trade the physical,
Yeah.
but I would be a bit nervous if I were
Would
an end
you
user.
would you say do you follow commitment of traders?
Yes,
Are
very, very
there
close.
are there heavy shorts in all three
Yes.
of them?
Very
Uh,
short, and we've
eh,
actually had in corn and wheat especially, we've had more in the way of selling than what was anticipated, and that's always something I want to see. I feel like towards the end of a move you tend to see the speculator pile in a bit more for no
yeah.
bang for their buck. Like that's what I want. I want the late,
So the
late folks
commercials
coming
are
in.
very and commercials are very long.
Commercials have ownership, but that ownership has started to shrink. Yes. I mean,
Okay.
commercials, you had the farmer selling at about 85% of their crop here very, very early. And so the commercials had extreme length, which is a short on the CFTC position.
Okay.
From a physical length standpoint, they're going to sell the futures
Right.
to hedge their risk, but their ownership is starting to get depleted. We're starting to hear more stories of folks in the physical side of the market getting nervous on how they're going to supply their needs July forward, especially with the delays in planting, the cooler, wetter temperatures in the Eastern Corn Belt. I mean, there's a handful of things that'll make this market real interesting here over the next couple of months, if you ask me.
Okay. Well, I'm glad you're on because hadn't been paying real close attention with stock market crashes and everything.
Right.
You know what I want, you know, people always focus on with these tariffs, the difficulty of exporting, the ag community having a harder time exporting what they grow. But no one ever talks about what are their problems with inputs
Yeah.
to bring in a crop with like fertilizer and things made outside of the U.S. that cuts into the thin margin of bringing in a crop anyway, right?
Hmm. Yeah.
What
Yeah.
are they?
It's a
What are they worried about not being able to get, or if they get them, uh, the price increases?
Nitrogen is the biggest thing so far. You cannot grow a crop without fertilizer with nitrogen,
Yeah,
especially, and you've seen a pretty sharp jump higher in value there. Ideas of increased demand. We've seen restrictions on China exports for several years. Obviously, Russia, is a large exporter of fertilizer as well.
okay,
And so you've seen some restrictions there that were before the war, and unfortunately, we have some folks in agriculture that are from large industry groups that also fight to restrict the imports of cheaper products because it cuts into their margins, and they have, the ear of the legislature and are able to kind of work around that. But the biggest thing to me right now is before the jump you saw in fertilizer prices, the break even cost of producing corn was 465 a bushel. And that was earlier this year when prices
yeah,
were higher, fertilizer prices were much lower, excuse me. And we're talking cash price of 465. The futures market currently is trading right around what, 445, 450
yeah,
sort of area there on the
450.
December board, 447. And so, you take basis off from that, the difference between the cash price and the futures, and a farmer is looking at harvest time, taking in probably 415 to 4.25 if he were to market today, if she, they
Right.
are lucky enough to have a solid market. There's some folks that I work with out in the Dakotas that, they're looking at $3.50, $3.65 for their crop. Now, their cost
Wow.
of land is cheaper. They may not be 465 a bushel, it might be closer to 4. But you got a lot of folks that are looking at locking in an extreme loss before they even put a seed in the ground. And a lot of people would say, well, then don't plant it. That's not how farming works. Like, that's just not how it
Okay,
works.
tell us why.
Because
Far,
basically you have a relationship with your bank. You have a certain amount
right,
of fixed costs that need to go out anyway. You're going to
right,
have access to that via a lender. It's very hard to, obviously finance all of the costs that go into running a farming operation, self-finance, especially. There are folks that could do it, but obviously that's not the way that you aren't set up to produce a product to not produce a product. However, I do think that with the folks in the areas that have these sort of less than desirable conditions, if you're looking at having to make a decision to replant corn in southern Indiana or southern Illinois, across Kentucky currently, you're probably going to think twice before you do it. You've already tried once, you've outlaid all of that cash. Most growers do have crop insurance that will help, make them partially whole. As you're never going to be whole in a year where weather is bad and the price is bad. But it's just going to be one of those things where the USDA is currently predicting a record corn yield at 181 bushel the acre. Every day that goes by that we see delays, every day that goes by that we see an increase in the cost of nitrogen or the cost of fungicide or the cost of pesticides that are imported, whatever,
yeah,
you're going to see margins compressed in a farmer who has less desire to do it. And
yeah.
so that's the thing that we're really paying attention to right now is, I feel like you're going to have atrophy of yield just simply because of the increases in costs, the harder to get inputs, and the more compressed markets that you have. It gets a little bit more difficult. I'm optimistic. Like, don't listen to this and be like, oh my gosh, like pray for the farm. Well, always pray for farmers anyway. Pray for everyone. I don't care.
Yeah.
But when it comes down to it, like, it's one of those situations currently where things are not comfortable, but it's not necessarily trade that is doing it. It's just the way that the farm economy works, unfortunately.
Yeah, you would have thought the weaker dollar would have generated more nominal gains for
The thing is,
the
Dale, like,
grains.
the weaker dollar is generating more in the way of increased US export business. The problem is the narrative in the market is because of the trade, because of Trump's tariffs or whatever, we're not going to be exporting ag products. It's not founded in truth. That is an opinion that people have asserted as fact. If you look at corn exports currently, the USDA is anticipating around a 308 million bushel year over year increase. We're currently over 500 million bushels, over a half a billion bushel ahead of last year's export pace. New crop wheat sales are currently 1/3 better than where they would typically be this time of year, 30% better.
Well, are they front running the tariffs?
No, it's not front
that?
running the tariffs. It's economics. The cheaper dollar is making our products are already cheap in the world stage because we have them available, we have them logistically able to be shipped. And then as the dollar has dropped substantially, it's helped make them more attractive to the world buyer. I mean, we used to be the granary. When you and I started talking, we would discuss how the US was the granary of the world. Right now, we, outside of soybeans, because Brazil has had a massive crop, we are basically the supplier of first resort versus last resort to the world for corn and wheat now, between now and basically the end of the summer.
Okay. So you want to know the heartbeat of a crop? You have to talk to Angie. So here's where you could find her. Okay, this is her business website. And look, when I came into the business, I was taught that the two best technical markets to trade were currencies and grains. So, maybe during this era that we're in, you look up, at something else besides a financial asset. Take a look at agriculture. You can't eat gold, right, Angie?
No, you can't. Yeah, it doesn't work.
Unless it's protein gold.
Right, unless it's corn, golden wheat, I guess you can say
and
that.
Beans, protein gold.
Mm-hmm.
Tofu. So Angie, I hope that you guys have a great growing season and have a bumper crop and with your business and all your clients. I hope it's a great season for you.
Thank you so much. Yeah, I do too. It's always a little scary this time of year. You just don't know what to expect, but it's also exhilarating and super fun. So this is my 21st growing season, and I'm just as pumped as I was on my first one. So I guess that means I've landed in the right spot.
You love what you do.
I really do. Yeah. I'm lucky.
And we have maybe a real hot August when we'll be talking again to be nervous about weather the next time we get together. All right.
Sounds
so there's just like a trader, Angie, you and I, and you are a trader just with grains and cash instead of and futures. We'll see what kind of trade we have setting up in the summer.
Sounds good to me. We'll look forward to it.
So really bring in a great crop, and I hope everyone has a good year and exports continue. I think there'll be more of the more dollar weakness to come for a little while. So good hunting. Thank you for coming. And really, I learn every time you're here, Angie, about what's really going on. You have your finger on the pulse of it. So
I appreciate that. I always enjoy coming on, and anyone has any questions, don't be shy. Don't hesitate to reach out. I am an open book. If I can't answer, I'll find you someone who can.
There you go. Angie Setzer, everybody. Find her on X at the Goddess of Grain. And now you know it's not just words. And that's a wrap, everyone. You could join the team in about 18 minutes. Don't just count your ears of corn, count your blessings, right? And I'll see everyone tomorrow for Turnaround Tuesday. Everyone's thanking you, Angie. All right. See you guys later.